the show about extraordinary climate solutions that cut carbon and improve modern life. Each week on Supercool, we go behind the headlines to pinpoint the stories and data accelerating the low-carbon economy in towns and cities across the U.S. and around the globe. I'm your host, Josh Dorfman. Stay up to date on Supercool by hitting the follow button wherever you're listening. This week, we head to where few climate podcasts rarely venture. We're going into the world of Bitcoin, taking a deep dive with Matthew Schultz, the founding CEO and now Executive Chairman of CleanSpark, currently the fourth largest publicly traded Bitcoin miner by market cap, a company valued at $3.2 billion. I've wanted to speak with Matt since I first learned of CleanSpark's renewable energy roots prior to Bitcoin mining and the approach the company takes to prioritizing clean energy sources, which today for CleanSpark is primarily nuclear energy. This caught my attention because Bitcoin mining is frequently criticized for the massive energy required to solve the complex calculations, resulting in new blocks on the blockchain and Bitcoin rewards for miners. What else stood out to me about CleanSpark is its seemingly positive and mutually beneficial relationships that the company has developed across rural America with the communities in which it operates. This too stands in contrast to the ongoing narrative and critique of Bitcoin miners as being either hostile or indifferent to the needs and concerns of the communities where they locate. CleanSpark, it seems, is actually walking the talk on ESG, whereas many other public companies have decided that they no longer care to walk or talk, pulling back on public commitments and de-emphasizing the topic of environmental social governance in their corporate communications. So along comes Matt, who says, sure, I'll come on Supercool. I want to tell you what we're doing. And today, he definitely does. But this is no ordinary conversation with a typical startup founder / CEO. The story you'll hear begins on a salt scald in Texas, where water sludged up through oil and gas drilling has denuded the land because of its salinity, saltier than even the sea. It winds its way into the invention of a clean energy technology that can convert any carbonaceous feedstock into a clean synthetic gas with no airborne emissions. It heads to building zero-emission parts for NASA that are then shipped to a subsidiary of Coors Brewing, the largest manufacturer in the world of high-temperature ceramics, and some pretty decent beer. We then find ourselves at Camp Pendleton and other military bases in California, where Matt and his team are building solar plus storage microgrids for the US military. Naturally, from there, we travel to South Africa, where Matt is working on alleviating energy poverty with the South African government and the World Bank. And finally, after all that, we arrive at CleanSpark's entry into Bitcoin. Because CleanSpark, at its heart, is an energy company that mines Bitcoin. And that's part of what gives the company an advantage over everyone else. What do I mean by that? CleanSpark ventured into Bitcoin mining in December 2020, less than 4 years ago. Today, it's the fastest growing public Bitcoin miner on the planet. While it's the fourth largest miner by market cap, it's the second largest in terms of new Bitcoin mined each month. CleanSpark today mines between 3 and 4% of all new Bitcoin generated on the blockchain. So the steps this company takes are hugely consequential. All right, get ready for a wild ride. Here's my conversation with Matt Schultz. Matt, welcome to Supercool.
Thank you so much for having me. I'm excited to get to chat with you today.
This is a show that we've been building now for several months, and we've wanted to bring on innovators across a number of different industries that are approaching their businesses also with a mission around climate, carbon reduction. And the story of CleanSpark is fascinating to me. I know that you come at this from the energy side, or you have this interesting path to crypto, interesting path to Bitcoin. Can you share that backstory with us?
Yeah, for sure I can. It's a bit of a long story, so humor me, but my career has always been focused on the energy business. And, 20 years ago, it was traditional energy. It was finding ways to monetize financial instruments to incentivize domestic energy production. So think oil and gas, think reworking wells that had been abandoned, traditional energy stuff. And we bought a lease in Young County, Texas, and it had been abandoned. There was some plugging liability, but we had done some seismic analysis that indicated if we did a targeted water flood, we could drive the remaining oil to a collection point, and while doing so, re-inject wastewater. So it was a cool project. And I had seen the maps and all of the kind of subsurface data, but I'd never been on site. And we went out to this location with a geologist and a reservoir engineer and a petroleum engineer in a Chevy Suburban. And it's a little bit rainy, not a hard rainstorm. And we turn off the main road into this area, and there's a dirt road. And with just a bit of rain, the whole car starts to slide to the side of the road. And I started to look around. We were engaged in a conversation. And I look around, and there's like an 80-foot tall tree with the root structure intact, just laying on the ground. And as I'm observing this place, there's not a blade of grass. There's no sagebrush. There's nothing. I was asking the landowner, tell me the story. And he said, decades ago in the oil business, when they would produce oil and gas, it comes out of the ground as a mixture. You got oil, gas, and water, and they run it through. In Texas and Oklahoma, they call this device a gun barrel or a heater treater. What it really does is it takes some of the natural gas and it heats up the mixture, so it separates the gas and oil. And then what comes off the bottom is the waste water. And I don't know if you know this, but water in formation in an oil and gas well is many times the salinity of seawater. So
it's many times the salinity of seawater. It's saltier than seawater.
No, saltier than seawater. So it's now an environmental hazard. But decades ago, they would separate the gas and oil, take the valuable product, and then flood the water out on these surface areas because common sense, the water's just going to evaporate. It's fine. Well, the problem is through repetition, you create this layer of salt and it literally kills everything. So if the microvegetation is dead, there's nothing to bind the soils. There's nothing to support the water going into the soil to feed the trees, to supply the trees. So everything dies. So what this place is called, or what that issue is it's called a salt scald. So it literally kills everything. And so I came back from that trip and I feel like as a father of 6, I'm doing a really bad job as a steward for the environment, being part of this industry. One thing led to another, and we changed the way we operated our business. Like all of our wastewater handling trucks had a decal on the back, and it says we didn't inherit the planet from our parents, we borrowed it from our children. But in sharing that story with a friend, I was introduced to a couple of guys that had a technology that could convert any carbonaceous feedstock into a clean synthesis gas. And the way that they had designed this unit, a gasification unit, it could do so with no airborne emissions. So it's a hybrid stratified downdraft gasification system. So you feed material into this device, anything that's carbonaceous. So municipal solid waste, coal fines, waste motor oil, anything that's carbon. So as we got into the process, we used railroad ties and all types of waste material that don't biodegrade. And we were using this as a feedstock to test and demonstrate that by using beetle kill pine trees or municipal waste, we could create a clean syngas, which would then go into a turbine to provide baseload power as a supplement to the grid or as a replacement in a remote area, in a military application. So we worked with 2 research universities. The Utah State University used to have a facility called the Carbon Energy Innovation Center. So we built this device, super cool process. Like we kept melting it down because the reaction was so hot, it would melt like high temperature alloys. And our manufacturer also did molds for components for the shuttle program. So we got talking one day, they were stamping out a big piece and just casual conversation. What are you doing with that big mold? And he said, it's a lower fuselage section of the nose on the shuttle. And we stamp the parts here and then we ship them to Colorado where they go to Coors. And I'm thinking, the beer company? And he said, yeah, interestingly enough, Coors is the largest manufacturer in the world of high temperature ceramics. So you hear the story about the reentry tiles on the space shuttle, that those were made by Coors. So
just 1 second. So that's made by Coors.
yep,
Okay.
it's just
And
one of their subsidiaries.
interesting. Okay. And so at this time, you're coming out of oil and gas. You are growing up in an industry, family man. So you're thinking about, okay, what is the impact that I'm having here as you're seeing what some of the byproducts, so to speak, the unintended consequences of oil and gas, right? Nobody wants salt water to kill everything, but it's high salinity water that's coming up. You start thinking about, okay, what else could I get into? You develop this cool technology. I hadn't heard that before. That sounds really interesting. Now you're on this path and you're with NASA, you're with the space shuttle, and we're still going to, like, it sounds like we're still a bit of a ways from Bitcoin, which is kind of really interesting to me.
We can get there
I want to
really
hear
fast.
it. Go ahead.
So we build the refractory, that's the part where the reaction happens in this reactor, out of this ceramic. And we're feeding it everything from waste coal to shredded rail ties to municipal solid waste. So rather than going into a landfill. And what comes off is a gas that's comparable to butane or propane. But because of the reaction, anything that isn't pulled off in gas is left in a slag material. It's like a glassy sand when it cools. So we would rapidly cool that and we could sell it as a construction aggregate. So it was a cool business. Unlike a landfill, you don't bury anything, but you get paid to take your raw material. You process it through this transaction or this process that takes electricity to begin the cycle, but then it's an exothermic reaction, meaning that as long as you just control the rate of the feedstock into the device, you can control the reaction without an external heat source. So it becomes really efficient. You pull the hydrocarbons off, everything that's left is rapidly cooled, ground up. It's now this non-leaching glassy sand product. Super cool. Like we're like solving the problems of the world with this. And we found an opportunity to work with a company that was deploying remote microgrids on military bases. And one of the things that they lacked was a baseload power supply because the sun doesn't shine all the time, the wind doesn't blow all the time. So what could you do that you could use things that are naturally occurring in the environment to create a baseload power that didn't have a negative environmental impact? So that was the story. So we're working with this company. They had a really cool stack of technology on microgrids. So
Matt, what year was this?
14, 15, 16.
Okay. Like 10 years ago, about a decade ago.
So they had built microgrids for military bases. They would integrate like concentrated multi-axis photovoltaic solar along with rooftop solar and geothermal and pair that with energy storage and then use the software that they built to grid connect. But then their applications were like mission critical. So guidance, navigation, communication, etc. So it had the ability, this was at Marine Corps Base Camp Pendleton. So it had the ability that when there was a disruption or a brownout or a blackout on the San Diego Gas and Electric grid, it could island away and it had redundant power. So energy security for mission critical applications. We get knee deep in with that. And we're working on a remote, it's called the Bridgeport Mountain Warfare Training Center in Northern California. And they needed baseload power. So we're working as the microgrid company with this cool technology. And our partners in the microgrid business came to us and said, hey guys, forgot to tell you we're out of capital and we have enough to make it about a month. We were faced with a tough decision. And what ultimately happened is Zach and I put a deal together, raised some money, used some equity, and we acquired this microgrid technology. So now we have power generation and we have energy distribution, but then we also had a whole portfolio of patents like demand response stuff. So in California, if you participate in the automatic demand response program, there's a good chance you used our virtual top node software that would communicate, send a signal when they're going to buy and when to sell power back and forth with the grid. And all these transactions happen.
So demand response, we're talking about the California market. So for a military base or whoever the client may be, that means if energy prices are high and you don't need the energy, you can sell the energy back to the grid, or you can pull energy from the grid when energy is lower, kind of really be efficient for that client in terms of how they're using power and ensuring that the grid is more stable. Is that a way to think about that?
Exactly right. It's financially incentivized energy arbitrage that incentivizes more renewable deployment. So
Okay.
as part of our software stack, we also had a modeling tool. So I could work with an energy developer that had a client that wanted to add renewables. So we could build a solution around a number of different vectors. So if your goal is to reduce costs, then we can model and design a system that avoids costs by adding more solar and then adding energy storage. If your goal, like the military, is resiliency, you have to have communications live. You can't go out just because of a brownout in California. Then we could model and design it around resiliency, or in a campus solution at one of the California state universities. If you're looking to avoid greenhouse gases, we could design a system that would maximize the input of renewables and minimize the input of grid power. So we had a pretty cool, robust business. We started to deploy residential microgrids, working with the state of California, where there were people that had medical needs. And in the areas where they would shut off the power because of wildfire danger, we would add solar plus energy storage to allow these people that maybe had a breathing apparatus or something else had critical need to be able to provide a residential microgrid. So even when the power's off, they still supports critical systems in their home. But then they also have the ability to sell that power back when things are functioning normally. So that's the base story. So
Okay. All right. So hold on. So this is just not your typical, like, yeah, we started a crypto company.
no, not at all. In fact, when we opened our massive scale immersion facility, a journalist from Axios visited with us, and in his article he wrote, Bitcoin mining, I'm paraphrasing, Bitcoin mining is generally crypto bros trying to learn the energy markets. CleanSpark is a team of energy professionals iterating in the digital currency space. So that was kind of the differentiation. But what ultimately the connecting point, we had worked with the Minister of Energy in South Africa to design community-based microgrids in areas where there was energy poverty. And there was these systems all modeled, they all penciled, everything made sense, but even the World Bank wouldn't finance them unless there was a large offtake agreement, meaning there's some industry, some corporation, somebody with a big balance sheet that's willing to say, if this isn't consumed by the target population, I'm going to put my hand up, I'm going to buy the power. And so that poses the question for our team, what kind of business or industry could buy power when it's available and not use it other times, that could work to balance loads when there's peaks and valleys in the demand, that could be completely curtailable or interruptible in the event of a black swan event where the grid is overbuilt for production and generation, but it doesn't have a ton of storage, but now there's demand elsewhere. And the answer was Bitcoin mining. Along this same path, my colleague Zach got a call to meet with a company in Atlanta, Georgia, that had a data center that, ironically, part of their business, they had excess capacity. So they were using that excess energy capacity and rack space to host Bitcoin mining. So we met with them not to become a Bitcoin miner, but to sell them a solution to offset a portion of the grid connected power with solar energy storage and wind to decrease their energy cost and increase the renewable exposure. So it's more environmentally friendly, but also it's also financially beneficial, right?
Hold on. And if that were the approach, and you're bringing in a microgrid and storage on renewables, then you're also making that business itself more resilient, right? There's a whole business case for why.
100%. Yeah.
Right. Okay.
So Zach calls me. He said, hear me out. What if instead of selling a Bitcoin mining facility, a microgrid, what if we bought a Bitcoin mining facility and we use our energy technology? And he used a statement that day that is one of the core principles of our company. He said, because what I've come to understand is that energy consumption of Bitcoin mining is a feature and not a flaw, because it incentivizes new energy generation to meet the demand, and most new energy projects are non-carbon emitting. So that was the path we followed. And interestingly enough, we're all over Georgia, we're in Tennessee, we're in Mississippi, we're in Wyoming. And so if you think about it, generations ago, our country had a lot of large scale industrial businesses, manufacturing and mining. Like Sandersville, Georgia is the world headquarter or the world center for kaolin mining. And kaolin is a substance that's used in everything from porcelain to rubber. But what's happened is all of the industry and manufacturing has left our country. And so there are these remote towns that are miles away from metropolitan city centers that have overbuilt energy capacity that are far enough away that the latency doesn't make them appealing to like a traditional data center or a high performance compute AI type facility. And so by working with these communities, we enable them to monetize this primarily nuclear power. But beyond that, like in the city of College Park, Georgia, city manager shared with us that because of the commitment we made to continue to buy power, it enabled them to sunset a coal-fired peaker plant 5 years ahead of schedule just because of the demand. So if you think about what we do as Bitcoin miners, we create this demand that's fully interruptible. It's completely curtailable instantaneously. There's no memory on any of these computers. It's not like a traditional data center or cold storage. I can buy all the power that you want to build and you want to make, and I'll take it right now. And when there's need for it elsewhere, I can curtail that load and send it immediately somewhere else. And so it's been a very friendly relationship as we built that way, because we're 2.5, 3 weeks removed from these massive hurricanes. And in a little town, Washington, Georgia, that town had a 7 megawatt total load, and we now have 86 megawatts of power there, which required we build new infrastructure and substations. So when the storm comes through, it knocks out the main substation for the city, which happens to be the power supply for the hospital. Well, we had overbuilt that infrastructure and capacity. So instantaneously, we're able to curtail those loads and push the power back and bring the lights back on. And then over the next 6, 7, 8, 9, 10 days, as everything stabilizes and gets repaired, we're able to gradually re-energize. The cool part about that whole story is these little rural towns have this power, primarily nuclear, because 5 decades ago when Southern Company went through bankruptcy, 49 little towns formed a co-op, and they all circulated bonds to fund their investment in the Plant Vogtle series of nuclear power plants. So now they own a little bit of the generation, and the way that the Territorial Act in the state of Georgia works, they can only monetize those electrons if they're sold in those communities. So Georgia now is a net exporter of power. And when they export to Florida, these little communities that paid for it generations ago don't realize any value. But what we did is we created a relationship where we don't hold anybody's feet to the fire as far as a fixed price agreement. We don't hedge power. We become the buyer that takes all the capacity that's available now. And when it's not available, we'll send it back. And in exchange for doing that, we get very favorable rates. But it works for the communities because we pay their flat cost for power, and then we allow them a margin. So 0.3 of a penny to 0.5 of a penny per kilowatt hour. And then as part of that Territorial Act that I mentioned, sales tax on utilities stay in those jurisdictions. So you get a little town like Sandersville, Georgia, that I mentioned, mined kaolin. There was a journalist that went out and did a story for an Atlanta news station. They talked about the fact that their city budget had doubled in the year since CleanSpark was there, just based on the margin on the power. By the way, that margin on electricity is earmarked for schools and libraries and walking paths and splash pads and trails, stuff for the community improvement. So their budget went from 16 to 32 million, but then you have sales tax on top of that. And the sales tax created such a surplus that they were now reallocating surplus sales tax to drive down property tax within the community. So think of this as a mayor of a small town. You get a company that comes in and pays to build the infrastructure to allow us to consume more of the power that we paid for anyway. We make a margin on that power. We're not at risk that if energy prices change, we're forced to supply energy below our cost because of the way that our transaction is scheduled. So we make money there. By buying in bulk, it's like Costco. So we drive down the rates for the ratepayers within those jurisdictions. And now we've created a budget surplus with sales tax such that now they're offsetting that to drop down property taxes in those regions. So what you see on a lot of mainstream media is Bitcoin mining is the evil empire, when in reality, we're allowing and incentivizing new renewable generation. You're not going to build new solar if there's surplus nuclear and natural gas power in a jurisdiction. So by consuming that power, we incentivize new renewable generation. We overbuild the generation. Don't think about energy storage now, because a lot of what Elon Musk talks about is energy storage. That's great, but just like the battery on your phone, if you build utility scale energy storage, it goes through that same degradation every cycle, and then you've got a disposal issue. So we think about it the opposite way. Overbuild capacity, primarily focusing on renewables in small towns that can monetize this, but also are grid connected to export the power elsewhere. And so what we're doing is, and what we proved during the storm, we're stabilizing the energy grid while lowering everybody else's cost and increasing the portion of non-carbon emitting power that supplies the grid over the entire geographic region.
Awesome. There's a lot to digest, and I appreciate the way you guys are going about it and the thoughtfulness behind it. Let me make sure I understand the value. I get the value to the towns, and you're identifying particular, like you're talking about being in Georgia, you're talking about being in small communities. They've paid for this infrastructure. They've paid for this nuclear. It's set up in such a way that even though they've invested in it, they actually only get paid on it if it's consumed within their jurisdiction. That's one.
Correct.
You come in and you say, okay, we have a big power need. We are going to build some infrastructure here. We are going to consume a lot of power. You're going to make money on our generation. Because we're doing that, and we're now living in an age where communities all over the country have climate targets, plus coal is actually not that efficient anymore. They're able to retire. You mentioned a peaker plant, right? And peaker plants are inherently higher price, higher emissions when those things have to fire up, right? So that gets retired. Taxes go down for local residents as a result of how the money flows through the town. You're able to stabilize the grid. I was going to ask you about Helene and when that kind of blew through, knowing the territories that you guys are in. And you're able to have this immediate curtailment and have the infrastructure now to help towns adjust, come back online, have energy flowing to critical infrastructure like hospitals, et cetera. I'm sure there's more. And then there's also operational stuff for CleanSpark itself, which obviously helps the business. There's a million different questions I could ask. You've taken this strategy. You talk about being kind of America's Bitcoin miner. Your operations are increasingly expanding across the US. Not every Bitcoin miner takes this strategy, though it does seem like the industry in general is moving increasingly toward renewables and has been for a while too. You see interesting examples of that from companies using hydro or other sources. What makes CleanSpark, I mean, you've grown so fast, right? Do you attribute that to the way that you come at this from an energy perspective? Do you attribute this to who your partners are in these communities, how you identify places to grow? You're in an industry that's grown faster than anything's ever achieved $1 trillion in market value on the face of the earth. And you guys are scaling up into this industry. What's driving that for CleanSpark? What would you attribute that to?
So understanding the value proposition of energy, when you overlay that with, we now have a commodity. And it's non-sovereign, it's hard capped supply, it's global, immutable, decentralized, digital, store of value, and it's functioning as it was designed to do. And so now we have this value generated from consuming energy responsibly. And when we were building microgrids, we focused on peak shaving and load balancing and identifying pockets of inefficiency and fixing that. So what we've done is we've duplicated that in our system. So we go in these small towns that industry left and technology never arrived. And we've created this opportunity to build and grow a local workforce. We provide college scholarships for the 2-year school, but information technology, we're basically training our workforce. And kids that want to stay home but don't have an opportunity to stay home now can. They can go into the mining business and they can be a mining tech and they can work their way up. We're one of the only facilities, the only companies in the country. We have repair labs on site. It's such a cool experience to walk into this clean room in our facilities, and there's a 65-inch monitor on the wall, and there's a guy with a microscope that's projecting on that monitor, and we're doing repairs all the way down to the microchip at a town of 4,000 people in the middle of nowhere. And it becomes, now we have opportunities for high-tech jobs. But even more important than that is our business is about efficiency. And where the communities benefit from our efficiency, these miners, they're sensitive, they're temperamental. When one goes down, a lot of our peers approach this business differently. They find somebody that has a data center with empty rack space, they go buy miners, they plug them in and walk away, plug and play. We've designed an entire stack of firmware and software that allows us to speed up or slow down our miners as economic conditions dictate. If the price of Bitcoin is under pressure and energy prices are high, I can slow down my machines, not shut them off. I can slow them down, which decreases the output, but it increases the efficiency. So I still have good margins for my shareholders. And the inverse of that is also true. When energy prices are low, all the solar's overproducing, natural gas prices are cheap. Even though we don't use a lot of natural gas, energy prices in this country tend to follow nat gas prices. Now we can crank those things up, overproduce, consume more power, but that the consumption of that more power goes back to providing additional revenue to the city. And then we invest in a ton of programs. We don't greenwash our stuff, but we're a direct participant in Georgia's Simple Solar program, which is dollar for dollar direct investment in solar. So now we've got all of these efficiencies, but unlike the model that I shared, you get a shipment of miners, you take them to a data center, they plug them in and set it and forget it. Now, everybody that touches a miner in one of my facilities, we don't import talent. Everybody lives there. We build organically. We grow the workforce. Everybody that touches a miner also happens to be a shareholder or an option holder or a warrant holder in the company. So all of our interests are aligned. And what that means is a computer goes bad, comes off the shelf. We've got a spare. It goes in the shelf. It goes into the lab, gets repaired, and then it goes back into queue. So our uptime efficiency is 98 or 99%, 97 last month because we curtailed to help the community during the storms. You look at many of our peers, multi-billion-dollar companies like Riot or Marathon, their uptime is in that 60 to 70% range. You know, Marathon owns 40% of their infrastructure, give or take. That means half of it is owned by somebody else. So a lot of these decisions that we make that relate to the local environments and the local economy and the local workforce, those are made by us, when in a hosted model, it's made by somebody else. So we've really tried to maximize all of the efficiency and eliminate any inefficiency. There's a great book called Grit. And whenever you work at our company, you get a copy of Grit. And then this year, everybody got a copy of The Obstacle is the Way by Ryan Holiday, who's kind of a Stoic philosophy student. And we build culture. I would say more important than anything else, we build a culture, and our culture is community responsibility, corporate responsibility, personal responsibility. And then we create these environments where we have teams of guys that are incentivized. So there's a group of mining units that is under one shift lead and another. And so you go to our facilities that, in fact, when Brady Dale, the Axios journalist, was there, we were walking through some facilities and there was a water bottle wrapper that had come off and it was blowing across in between some of the mining units. And one of the mining techs grabs it, picks it up and puts it in his pocket. And he asked me about that after the fact. He's like, how do you incentivize that? And I said, these guys get paid on uptime. They get a bonus, whether it's a Yeti mug and a gift card for Amazon or whatever the case may be. There's some kind of incentive and they love that. It's a carrot, not a stick. You're not punished if a machine breaks. But that water bottle wrapper could get sucked in a fan and could take a computer out, which lowers your uptime. And maybe you're not going to get that Amazon gift card this month. And so we've created this culture that everybody is always iterating. Everybody's thinking of ways we could do things better. It's created this culture of gritty, committed people. And it's a fun environment. We don't have a lot of turnover. The utilities love us. Unlike many of our peers, we didn't do a backdoor agreement to buy a bunch of power and created demands on the grid that now ratepayers are paying a disproportionate amount in order to fulfill our corporate needs. We've gone in the front door. We'll have a barbecue with the mayor and the city council, and this kind of stuff spreads. So now instead of us going and stalking new opportunities, little communities come to us and say, hey, can you come do that in our town? So it's just, we're diametrically opposed to the vast majority of our industry just because of that approach. And that really is what's led to our scale. Investors have got behind it. We were the first of the majors to publish a corporate responsibility report. We engaged NASDAQ's ESG advisory group to advise us, and not for the purpose of virtue signaling, but because the E, the S, and the G all have value independently in stacks. So it's not some, we're right and you're wrong thing. Being environmentally sensitive is important for a sustainable business, and having good corporate governance is important. And it matters to do things the right way. So it wasn't a burden to help build that roadmap. And what ultimately happened is a lot of hedge funds or retirement funds that can invest in a company that don't have a corporate responsibility report or a sustainability goal or have some type of an ESG profile, they can't participate with them. So it allowed us to access greater amounts of institutional capital more quickly, which has allowed us to scale. And we pass on infinitely more opportunities than we take because it has to fit the CleanSpark way. There's got to be a win-win. We're not just going to be a predator where there's a pocket of power and people don't know better.
Yeah, I love that. That is literally super cool. What I was doing before we started Supercool, I started a company with two guys from SpaceX, and we are in Oxford, North Carolina, about 30 miles north of Raleigh-Durham. And we've built an electrified mill instead of a giant mill for building materials. And we are growing this grass, which was being looked at for biofuels, kind of like bamboo. And we're turning into structural building materials in rural North Carolina and now Texas and elsewhere. And we're working with D.R. Horton, some larger builders. But the vertical integration was key for that business's success. We go from tissue culture lab to farm back to our own facility, built all the machines ourselves. And so when I hear you talking about the way the industry works versus saying, yeah, no, we're coming at this from the energy, we're doing everything ourselves. We're writing our own software, we're going to own our own facilities, or we're going to build a culture that is so closely linked to what this thing's all about. I can really see how that drives a lot of continuous innovation, and I can see how it drives a workforce that's really dedicated to your mission. That's cool. I wasn't expecting that answer. Where are you today in terms of energy sources and clean energy in your overall energy mix?
So we just are in the process of closing a transaction where we acquired another publicly traded company, Grid Infrastructure. And Grid had a multi-billion-dollar pre-SPAC value, and then the markets changed. We went through the crypto winter, and a bunch of really smart guys developed a bunch of really great energy contracts with TVA, which is the largest utility in the nation, predominantly nuclear and hydro. It has other elements, but we have the ability to partner with them. In Georgia, MEAG is our largest supplier. I think we're probably the largest customer of MEAG, which is the Municipal Electricity Authority of Georgia. Wyoming is something that kind of came out of left field. The grid in Wyoming is a lot more natural gas. However, the grid in Wyoming, the utilities in Wyoming have a sustainability requirement, and they are targeting decarbonizing the grid. Unless you have revenue from the existing available power sources, why are you going to expand? So for us, it's like what happened in College Park, Georgia. By entering the state of Wyoming that has a higher concentration of nat gas, we enable them to reinvest money into renewables because we create that demand to incentivize that. Microsoft has a massive data center in Cheyenne that's connected to the grid, but it also has a bunch of renewables. We had the opportunity to grow into Wyoming, and we were competing against a hyperscaler. And why would a regional utility choose to do business with a $3 billion Bitcoin miner when they could do business with a $1 trillion hyperscaler? And the answer is, to build these massive HPC data centers takes 3 to 5 years because you have to have redundancy to the fifth 9 at the decimal point. And we don't care. You can shut off our load 12 times a day. It doesn't make any difference because it doesn't hurt us. We're this really flexible load. So we approach states like Wyoming and other states that we're growing into. It may not be 90% carbon-free power when we get there, but somebody has to step in and make these investments in order to develop new renewables. we got to consume what we have. We're not just going to sunset natural gas power plants and leave a shortage while somebody builds a solar farm. And that's a big problem. There's a lot of Bitcoin miners because there was a ton of incentive capital to build these solar farms. So you get public and private partnerships, you build these massive solar farms, and then you have to do a large load study before you can get an interconnect agreement. So you have resources, billions of dollars in assets that aren't connected to a grid because of a political reason. You know, utilities are going to avoid that because they got to pay more for renewables than they can for the existing supply on the load that's nat gas. So we're going to slow play the interconnects. We're going to slow play the large load studies. So now you create these massive pockets of renewables that over time it creates congestion. So now to on-ramp that to the grid creates a bigger problem. So our idea of being decentralized, just like a decentralized energy solution, a microgrid, we take this decentralized approach and find these areas that we can make meaningful contributions. We talked about the fact a year ago we were 90% plus non-carbon emitting power. We've expanded partnerships into Mississippi, into Wyoming that have a higher percentage of nat gas with a goal to reduce that, and we play a valuable role in that. I think it can change those numbers over time, but our model is always going to be the same.
Yeah, that makes sense. That definitely makes sense. Some people are going to listen to this and they're going to say, Josh, you didn't ask Matt XYZ, or you didn't come down hard enough on XYZ. But that's not, one, that's not really the point of my show. And two, I understand what you're saying. And our view is that this is rapid transformation. And what I find really cool about CleanSpark is the approach you're laying out and the way that you're affecting change today and into the future with a sense of just what is viable and realistic, right? And I think that's often missing from just even a lot of the conversation around the clean energy transformation. I want to just shift gears for a second while I have you. Someone mentioned you're coming to me over and over and over again this past spring, every Saturday while our kids were playing soccer, and knew I had planted this company I mentioned and was getting ready to work on Supercool and looking for interesting companies. And he was like, oh, you should check out this Bitcoin miner. And I didn't know anything about Bitcoin. I now read up a lot and got very interested in your company and very interested in monetary history and how Bitcoin's place in history and where it's going. My question to you is this. I know a lot about sustainability. I know how people come to sustainability. When I was at Amazon for a bit and I launched a business there called Vine.com, it was like an online Whole Foods, natural, organic, sustainable products. And our kind of the reason why we launched the business as Vine, the reason why we focused in on that kind of product mix was very targeted at young moms, new moms, young families. A lot of the research and what was borne out in kind of the experience of that business is that people get interested in sustainability, or they come to it at these different kind of junctures in their life. And the biggest one is when you have kids, right? What is that kid chewing on? What shampoo's in their hair? Because I'm responsible for someone other than me. And it opens up this kind of door to learning. And then you say, oh my gosh, our car, there's emissions and this and the health, and right. And it's like, that's a path. Young parents, that's one of the, the primary drivers of consuming these types of products. Grandparents, to start thinking about legacy, that's another kind of inroad. I don't really have a sense of how people come to Bitcoin. And because it just seems to me that you have a market now valued at 1.3 trillion-ish dollars. Nothing's ever grown this fast on the face of the earth into creating this much monetary value. How do people, like you came at it from energy, how do people come to Bitcoin?
What's that worth?
$20 today, right now.
Okay. But it's worth $20 because we agree that it's worth $20. There's nothing behind that. We could safely say that in 1972, when the US dollar was decoupled from gold, it's now backed by the full faith and credit of the United States, which is trillions of dollars in the hole. And as a father, I think about the idea, you pull up a chart of M1 monetary supply and you look at what percentage of the US dollars that exist have been created in the last 1 year, 3 years, 5 years. And you talk about inflation. And there are obviously a lot of opinions about inflation. But at the end of the day, I think my argument for Bitcoin is twofold. I read an article that said 70%, I believe was the number, of all the transactions on the Bitcoin network below $100 either originate or terminate on the African continent. So what that says is all of the claims that people made in the beginning that this is a currency to bank the unbanked, and a lot of the talking heads and Jamie Dimon call it a pet rock and call it hogwash, we're actually seeing that be true. The fact that Bitcoin is finite, meaning there'll be 21 million and that's all, means it's hard capped. And so it's not, it's going to be a hedge against the devaluation of fiat currencies. I had an opportunity to spend an hour with RFK Jr. when he had initially announced his run for the Oval Office, and when he was still a Democrat, and he was at a Bitcoin conference, and his passion for Bitcoin was born out of the fact that one of his children left to go take part in humanitarian aid in Ukraine following the Russian invasion. And his thesis is that the war machine is fed by fiat currency, that the way wealth is created by a lot of multi-billion-dollar defense contracts is that we create a conflict and then we go solve that conflict, and it requires emergency authorization to print billions of dollars. And so, politics aside, the fact that we have this currency that is debased, it's completely centralized, it's arguably feeding terrible inflation. As a dad, I look at how hard it's going to be for my kids to own a home, how much they have to make just to be where I was at their age because of inflation. Which, is it really that things cost more, or is it really that our dollar is just worth less? So that's my position on it. I wrote a note before we talked. I kind of had a sense that this was going to be something we talk about. And so I wrote a quote, I wrote something down, and Bitcoin is a hedge against monetary and fiscal irresponsibility from central banks and global governments. And that's really what I see that it is. And so back to the, why is that worth $20? So each Bitcoin isn't produced just out of thin air. There's an input that's required, and that input is energy. And so there's a cost to that Bitcoin. It can't be zero. And so we now have something that is supported by a transaction called proof of work. So Bitcoin mining is proof of work, but beyond just the mining of new virgin coins, those transactions that I shared with you that may originate or terminate on the African continent or both, it's a global network, meaning some young guy in a rural community in Georgia has a great paying job to work at a Bitcoin mining facility that just processed a transaction that took place on a continent somewhere far away. And so the opportunities that exist as a result of the currency or the commodity that underlies this value, as well as the now investment thesis. It was a pet rock, magic internet money, not going to be worth anything. And slowly we've seen increasing adoption, and we've seen major US investment funds now say, okay, well, maybe this is a thing. To get to that $60 billion level of investment in gold ETFs took 10 years, took Bitcoin 8 months. So we're now seeing validation. I think people are increasingly going to be using Bitcoin as a hedge against inflation, as a store of value, as an investment product. Could go on forever, but you invest in a piece of real estate for your kids. Well, you spend a couple $100,000 on that piece of real estate, and ultimately you're going to leave something to your heirs. But do you actually own that? You pay property taxes every single year on something that you've already bought and paid for. Bitcoin is this immutable asset that you own and you hold. It's decentralized. It's on a public ledger. You don't have to pay taxes on it every year because it's like a currency. And the more dollars that get printed and the more destabilized governments become around the world, the more this becomes a flight to safety, security, and safe harbor. Not to mention the fact that in the US government, there are OFAC laws. You can't do business with certain foreign countries. The US government, I think Elizabeth Warren talked about, she has an army of anti-crypto advocates or warriors. And I think that's from a lack of understanding. She made a statement following the attacks in Israel that this was funded by Bitcoin. Well, Bitcoin's on a public ledger. You can prove or disprove anything by simply looking at a public ledger. I start to, speak with law enforcement and people about anti-money laundering laws. Bitcoin is not anywhere close to the top of the currencies used for nefarious activity, drug trafficking or illegal arms or human trafficking. The primary fuel for that is the US dollar, because Bitcoin is on a publicly listed ledger. So now we're being globally responsible and creating an asset and a resource that I personally believe creates generational wealth.
Let me ask you something a little different. I read a quote from you that goes back about 10 years to when you were working, I think, with the US military on microgrids and solar. It said, CleanSpark evolved into a commercial industrial company that focused on adding energy and storage to solar and other forms of energy generation, like we talked about, in order to allow people to operate away from the grid. This is your quote, right? And I was thinking about that because my whole career has been, or most of my career has been around sustainability. And when people talk about solar and storage, that's not usually the first phrase that comes out of their mouth of why they might do that, right? Maybe there's a climate ethos, right? We're decarbonizing, right? But there was a sense in there of we're going to enable you to operate away from the grid. Now, I can really understand that in a military context, right? If the grid goes down and we need to enable you to have some resilience. It just also struck me as a little bit of, and I think about this evolution into like Bitcoin, as I don't know if I fully trust the authorities that be to do the right thing or run the system the right way. I may be reading into it, but knowing the decentralization, some of the benefits that you talked about, is there a little bit of a thread there for you personally from an ethos perspective?
There are for sure libertarian principles that apply to
libertarian
Bitcoin.
Principles, yeah.
Okay, but I think, you know how we all have a recency bias. I recall that quote, and I had just finished reading. Do you remember Ted Koppel?
Yeah, sure.
Nightline, right?
Yeah,
so,
of course.
So he spent a decade researching and then writing a book called Lights Out. And the principle, the underlying thesis on Lights Out is that the U.S. energy grid is inherently unstable, and that we've developed this expectation that you walk into the room and you flip the switch and the lights come on. And there is no guarantee that's going to happen. In his book, he theorizes that there are 9 critical intersection points on the grid that if there, and this is 2015, I'd recommend you read the book. It's chilling, but it's very telling. There are 9 critical points of intersection on the grid that if there were a simultaneous act by a foreign or a nefarious actor through a cyber attack, a physical attack, or an EMP, that there are parts of our country that could be without power for greater than 24 months. So the idea isn't, I don't trust the grid or I don't trust the Fed or any of that stuff. The idea is that, again, as a dad, I have a responsibility to provide and protect for my family, right? As a microgrid company, we were using an energy storage device that was kinetic energy. So a 6,500 pound stainless steel disc on an electromagnetic bearing in a vacuum chamber buried 20 feet below the surface in the desert, powered by an EV car motor. So the solar's peaking, this massive disc starts spinning. At the peak of the day, that's now spinning at 0.9 Mach. The power goes out, just like when you decelerate on your Tesla, that motor is now a generator. It flips and it's now pushing power back. So the idea that mission critical communications, navigation, and guidance are not reliant upon the SDG&E grid at that scale is important, but it's no less important than your grandmother that may be on a ventilator. We have this obligation, and sure, you have a USB, but how long does that last? And when you read Ted Koppel's book, he talks about we have this false sense of security in the diesel generators behind the hospital. and how long they can last, but he talks about how long till they're out of fuel, which is no problem because you can get more fuel, but the refineries are powered by electricity. And so he builds this timeline of how long before the country runs out of pharmaceuticals and groceries. So it's not a conspiracy theory or woe is me, the world is ending. But if we could be more responsible, if we could be more sustainable, if we could have a little bit more control over the currency that we spend or the energy that we consume, why shouldn't we?
Matt, I want to thank you for sharing all of your views and insights with us. I really appreciate it. I respect what you're doing. I have incredible admiration for the company you've built. It's just truly extraordinary what you're doing. Wish you the continued success.
Josh, thanks for having me, and I would love to do this again sometime.
Awesome. We'd love to do it with you. So hopefully we get another chance.